Hey traders, Jason here from Levitt Brothers. Hope you're well. So I'm back. I've been gone the last month. I was I was in Puerto Rico, so kind of out of the country, not really out of the country because Puerto Rico is a territory of the U.S. So anyways, for the last month, I've been kind of laying low as far as social media goes. I didn't do any YouTube videos. I did a few blog posts, toned down my stuff on Twitter. But now I'm back, and I'm going to start posting a video once or twice a week, get back in the swing of things, example trades like I'm going to do today, educational stuff, state of the market videos, just to give you my analysis of what's going on in the market and what's going on with trading. So in this video, I'm going to talk about just some example trades and trade management. Nothing too heavy, just a handful of trades that were posted at Levitt Brothers. These were all stocks that were posted on our trading list, and of course, a lot of them triggered per what I teach in my masterclass. All right, so let's get into this, and then you could expect more videos going forward. All right, so first up, what we have here is a split screen. On the left is a daily chart. On the right now is the 1 hour chart. I'm going to go back and forth between the 1 hour and the 2 hour. I use both of them. All right, so let's go get into this here. Okay, so on looking at the daily chart here, and I'm just going to walk through, talk randomly about things that I look for. So I see resistance over here at the 21. The orange line is the 21. Resistance at the 21. Then what happens is the stock gets above the 21, comes down and tests the 21, and then it moves up. Our target was at 120. So it moved pretty close to our target. Didn't exactly hit it. And in the last 2 days, it has fallen back. Now, a couple things to point out here is that as far as a trade entry, what I look for is I see, MACD crosses up, and then while the MACD trends up, when the stochastic cycles down, those are entries, okay? So the MACD is the trend, and the stochastic is a timing mechanism within the trend. So I had an entry here and an entry there per the stochastic cycling down and then going back up. Okay, once you're in the stock, and again, my target was 120. So once we get up to 120, you could just take profits, or you could just trail it with a stop, figuring, hey, the market's doing okay right now. Let's see if we can milk it for what we got. So moving over to the right panel here on the 1 hour chart, this is what I saw playing out. So right here, the MACD crosses down, and right here, it tried to cross back up, but it failed to do so. Okay, and at the same time it failed to do so, the stochastic had cycled up and crossed down. So this is my kiss and cross trade, where you get a kiss here and then a cross here at the same time. It doesn't always happen when the stock's making a higher high. In this case, it does. Stock was trying to push higher over here, but the MACD kissed and the stochastic crossed down. So there is a definite warning that there's probably going to be a trend change. Now, if you're a shorter term trader, this is definitely an exit. If you're trying to nail a more intermediate term trade, you could certainly put a stop at a previous low like right here and say, hey, even though I'm getting a sell signal on the MACD and the stochastic, I'm going to give it a little bit of time and space to see if it can move sideways while the indicators cycle. So in this case, it didn't. The stock eventually moved down to get a decent profit. Remember, the move started down here at 90, went up to 110 over here, came down and tested 100, and then moved up to 120. So we got a pretty good gain in there. You give a couple points back on the way down in order to nail an intermediate term trade. That's not too bad. All right, next is cars. All right, so on the left side here, we have the daily chart. So we had this, I guess you can call it like a symmetrical triangle type of bottoming pattern. So stock breaks out here, comes down and tests the gap between the 8 and the 21, and then it moves up here. My first target was 12, and my second target was 13.5, which, as you can see, it hasn't gotten there yet. So let me delete a couple of these and point out a few other things. Now, with timing, again, what I said in the last chart is when the MACD is trending up, the stochastic can then be used as a timing mechanism. So this is a buy which gets you in over here. This is a buy, which gets you in on the test there, okay? So MACD is the trend. Stochastic is a timing mechanism within the trend. So if I look over to the right panel, to the 1 hour chart, what we have here is we have a negative divergence, okay, which is a little bit of a warning, but you don't have to immediately exit. Because what I see here is I see a stock that got good support from the 21, support from the 21, support over here from the 21. So even though you're getting a negative divergence and then the MACD is crossing down, I'd be willing to give it some time. Let it, maybe it could, move sideways. Maybe move sideways long enough for the 21 to move up and catch it. I'm not going to panic and sell, but you get a cross here, so the negative divergence is followed by a cross, and the stochastic had already broken down. Okay, I draw trend lines on the stochastic, so a combination of negative divergence here, this crosses down, this crosses down, that could get you out, and then absolutely for sure, when the stock opens up weak here, and goes below the 21, which is the orange line, that's definitely a sell. Okay, so not a bad trade. On this one, when it comes to trade management, like you could be the type of person that's just going to trade, you're going to sell at the earliest sign of problems, okay, or at your target, and that's fine. You're going to occasionally miss a bigger move, but you're not going to give profits back. Or you can be the type of trader that's, hey, I'm going to give it a little bit of time and space to move around. And by doing that, you're going to nail bigger moves, but once in a while, this is going to happen where the stock gaps from 13 down to 12.7 and sells off, and then you got to just dump it, okay? So one or the other, they're both fine. Just be one type of trader or the other. So this was a good trade, bottomed over here, broke out at 10, moved up, came down and tested, moved up all the way at 13 on percentage basis. That's a great trade. All right, Sienna. All right, this is how I had my trend lines here. I had 48 as a key level. So we had higher lows. We had similar highs at 48. Stock broke out over here, came down and tested both the 50, which is the blue line, the 21, which is the orange line, and the previous resistance level, which is 48, and then moved up from there. So this is a really good trade. And as I've said, when the MACD is trending in one direction, when the stochastic cycles down, these are entries within the trend. Moving over, I'm going to flip, I'm going to get rid of those trend lines. I'm going to flip this over to the 2 hour time frame. Okay, so as the stock in my, as the stock is moving up, I'm going to note a few things, like when, as I reach my target, or is momentum starting to decline? Are there signs that buyers are starting to get exhausted? So what I see here is I see MACD crosses down, which at first is no big deal, okay, but then it continues to trend lower, and there was an attempt to move up there, which failed. There was an attempt to move up there, which failed, and then the stochastic broke down. So the combination of the stochastic breaking down here with the MACD trying to curl back up, failing there, is a definite warning. You have support from the 21 here, here, and here. So without question, so you could get out at these warnings, or you could just say, look, I'm willing to give it a little bit of space, but if it goes below 21, I'm out. And then that happened today where the stock gapped down a little bit and then sold off, so you're out. Okay, so not a bad trade. If you come back over to the daily chart, ooh, that's terrible. If you come back over the daily chart, stock broke out at 48, came down, tested, and went from 48 to almost 54. You give a little back on today's selling. That's trading. All right, next one, ionq. Zoom in on this one a little bit. All right, so I had this one. This is another stock that was on our list. So we have a rolling pattern here. Resistance from the 21, 21, 21, 21. So a little double bottom here. Boom, boom, boom. Gets above the 21, comes back down, tests the 21, and then moves up from there. So that's a really good sequence. MACD trending up this entire time. You get a buy there, buy there, buy there. Again, MACD is the trend. Stochastic is a timing mechanism within the trend. I teach this in my masterclass. You can check that out at the link below this video. Going over here to the 2-hour chart, this is what I see. I see, first of all, this looks kind of like a blow off top. Okay, so that's, you know, they run up like that. They're likely to crash hard. You get a cross down here, which is not an immediate sell. Okay, but when I see stochastic, you know, falling out of, you know, a topping pattern like that, the combination of MACD crossing down with a stochastic falling out of a top, that definitely gets my attention. Even if you wanted to have a stop below the 21, which would have been pretty far, you would have been out today. But because this stock ran up so much, I would have had a stop much closer. You can zoom in on maybe a 30-minute chart and find a low somewhere in here that you can say, if as long as it stays above this, I'm good, but if it goes below that, I'm out. So really nice trade coming out of a base here. Stock's falling hard now. That's the way it goes. Ride them up and then dump them and move on. No reason to hold on to a stock that's falling. Definitely want to pay attention to those warning signs. All right, so here's Roblox. Let me all right, so on the left side here, stock was in a, you know, coming out, I don't want to say coming out of a base, but it broke out here, moved up, came down, tested the 21, moved up, came down, tested the 21, moved up, came down, tested the 21, and then moved up from there. Okay, so the 21 had proven to be pretty strong support. MACD trending up. You get buy signals from the stochastic here as the stock was moving up to my target, which was 50. This is on the right side here. It's a 2-hour chart. You get a negative divergence here. You get a cross there. You get, and the stochastic breaks the support level there. Okay, so the combination of negative divergence, MACD crosses, stochastic crosses down. Even if you put a stop in below the 21, here's a 21, here's a 21. Even if you put a stop in below the 21, that's not bad. You still nailed a pretty good move. Okay, last one, SOXL. It's a leverage ETF for the Semiconductor group. So stock, so we got, you know, positive divergence here. Okay, then we got this crosses up at the same, you know, after the stochastic had already crossed up here. Then the stock trades in a little range for 5-6 days, breaks out of there, rallies up, comes down, tests the 21, and then rallies up again. So really good price action. Got another entry over here where the MACD did not cross down, the stochastic cycle down and then cycle back up. So really good overall price action. On a percentage basis, this is huge. Overall, the stock doubled. Okay, you're not going to nail that whole move, but there's definitely, you know, positive divergence pops up, rallies hard, comes down and tests, rallies hard again. There's definitely some trades to be had in there. Moving over to the 2-hour chart, you got a negative divergence here. You got a cross there, and then the stochastic falls out of a topping pattern. So you got a cross there. Okay, so the combination of MACD crossing down, stochastic crossing down and falling off at top, support from the 21, 21, 21 there. So lots of warnings, you know, lots of warnings over here. And then as soon as the stock goes below the 21, you can exit. And then especially right here where it trades, you know, this is a 2-hour chart, it traded 3 candles right there where it couldn't get back above the 21. That is definitely an exit you don't want to hold there. Okay, so some good trades coming out of bases. And then as stocks made upside progress, there were definitely warnings that told us move stops much tighter. Okay, hope you got something out of this. I'll be much more active on posting YouTube videos going forward. Hope your trading's going well. Questions, comments, leave them in the comment section below. All right, until next time.